Hello Facebook, Ty Crandall here with Credit Suite. Today we're talking about shelf corporations. We're talking about everything you need to know about shelf corporations, including what they are, how they work, how other agencies like the FTC, the Business Credit Reporting Agencies, etc. look at shelf corporations. Basically, everything you need to know. Now, full disclosure, people that sell shelf corporations do not like it when I talk about this topic of shelf corporations because I'm going to shoot you very straight. I'm going to tell you all the stuff that you really need to know regarding shelf corporations. So we'll start with the basics, talking about what they are, how they work. Then we're going to dive in and teach you all the little nuances, all the little things that you need to know, especially the stuff that the people that sell these companies don't really want you to know. So let's head to the whiteboard, let's head to the chalkboard here. So today we're talking about shelf corporations, and let's talk a little bit about what you need to know about them. So first of all, a lot of people are trying to game the system using shelf corporations. We'll talk a little bit more about this, what they're doing, what you need to know about it, etc. We're even going to talk about the official word on shelf corporations from the Business Credit Reporting Agencies, amongst many others as well, okay? So let's talk about this. So first of all, shelf corporations are basically corporations on paper only, okay? They're basically formed by a company or an entity, an individual, then put on a shelf for years to age. And they're just kind of waiting to be bought or by somebody else that thinks that they have value. Okay, so basically they're also known as aged corporations. Okay, that's ultimately what they are. So let's talk about the difference here. First of all, shelf corporations and shell corporations are two different things. A shell corporation is, you might create a corporation for a particular purpose to have just as like a shell company, and they're legal and everything's good with them, and a lot of people use shell corporations for a lot of things. But shelf corporations are actually described, their name describes what they do. What they really are is an entity that's formed. They're put basically on a shelf, and they're left there to season, thinking that the seasoning will provide value. So let me give you an example. In Florida, it's about $70 to set up a corporation. So I can go to Florida, or I come in Florida, I set up a corporation, and then when I set up that corporation is brand new. It has just newly been formed in Florida, okay? Now, if I want that corporation to age, if I want to have a business that's 5 years old instead of 1 year old, for example, then, I'm testing my new Facebook comments here, and it looks like Alquina says hello, and I said hello back. So see, I can see Facebook comments right now. My executive assistant Tracy's been helping me get this set up, and I think we got it figured out. So I think I can even see your comments today on Facebook. Go ahead and send a hi message to me, and we'll check it out. So back to shelf corporations. So again, people set up an entity in a state like Florida, $70 to set up a corporation, and then they don't do anything with it. All they do is they just pay the fee every year to renew that corporation. Okay, now the idea here is that when you have a corporation that sits on a shelf and basically you set it up and don't do anything with it for 2 years or 3 years or 4 years, then what you end up with is an aged or seasoned corporation. Okay, that's what shelf corporations have their inherent value from, is that somebody set up an entity, it sat there for 2, 3, 4, 5 years, and now when you go to apply for loans or credit cards or tell people how long you've been in business, you can say 2, 3, 4, 5 years. Okay, that's why people ultimately set up short shelf corporations. So that's really what these are, is they're corporations that nobody does anything with. They're basically created on paper or with the state. And then also, ultimately, they're bought and they're just seasoned. They're just, nothing's done with them. They're just sit there and left to age. So what isn't a shelf corporation? Well, shelf corporations are 100% different entities in the scope of formation, meaning they are real entities that people are setting up in the appropriate state, okay? And shelf corporations also have no significant asset operational structure. They're not actually a real business at all. All they are is the entity that's set up. It's very cheap. It's very easy to set up entities in most states, and that's what shelf corporations ultimately are. So what makes up a shelf corporation? Well, typically, these are sold, okay, because their value comes in them being aged. And we'll talk into whether that's true or not and what value they may actually have, okay? So the person's never done anything with them, so there's no employees, there's no bank account, there's no things like that that's actually set up. It's just ultimately a shelf corporation is set up, and then it has a value to the right person because it's sat there and aged. So this isn't really necessarily a full business. When we think about a full business, you might have employees, you might have bank accounts, you might have all these other things involved. With a shelf corporation, it's none of that. It's just a corporation that you set up in the state, in whatever state of your choosing, okay? And then that corporation will actually be there and will be able to have some possible value. And I'm just checking my comments here because I'm just go ahead and doing a little check. But again, guys, feel free to say hi, say everything, say anything. I'm testing my comments now, and it looks like all is good. So Reginald said, greetings to you. So far, I'm able to see your comments, which is a good sign. Let's go back to the chalkboard. Okay, so how have shelf corporations been legit? Are they legit? Let's talk about this. Well, first of all, shelf corporations used to be the legitimate way to streamline a startup, okay? Before you could do these online registrations with the state, before you could actually come in, and before they can actually come in and make sure that the business was set up, you had to go in person or do it by mail. Now you can go to the Secretary of State website to set up your business, okay? It used to take many months to do this. Okay, so again, a lot of times what happened was people did this to actually save themselves time. So why do shelf corporations even exist? Because we used to live in a world where we didn't have the internet. You used to have to file by mail and file in person, and it took years to set up a corporation. So shelf corporations were created because you could buy a corporation without waiting months to get your business actually set up. Okay, so that's one of the reasons that they were originally formed. Now that we can go to the Secretary of State online and electronically set up a business, they don't really have as much of a purpose because you can now set up an entity immediately. Matter of fact, in Florida, I can pay a little bit of extra money and get my corporation papers immediately. The minute I set it up, it takes me about 15 minutes max to set up a business in the state. Now, they still have a little bit of value because sometimes with some contractors, you need to have a longer time in business to actually be able to get contracting jobs. So for some, for example, government type of contracting jobs, they may want you to be in business 2 or 3 years. So in that case, it might provide a value. But ultimately, the reason shelf corporations existed in the beginning was just because it used to take so much time to actually set these up. It used to actually take months to set these up. Okay, so can a shelf corporation be legitimate these days? Well, first of all, you need to know they are legal. Anybody can set up a corporation and set it on the shelf. These are not illegal to have. They are legal, okay? The question is do they even have a legitimate purpose or not? Well, in theory, you can use them if you don't qualify for bank loans, lines of credit, government contracts, because you don't have a necessary time in business. This is where people use them. People in my world, being that I deal with capital, they try to come in and they try to convince banks and they try to come in and convince credit issuers to get lines of credit and loans that they've been open longer than they really have. That's why they're using them. Now, I mentioned one of the other reasons that people use shelf corporations, and it's because of government contracts. Sometimes these contracts require before you can bid on them that you're open for about 2 to 5 years. Okay, so that's the most common reasons that you're actually going to see these. So let's talk about both of them. First of all, when it comes to government contracts, I do agree that this actually could possibly be a benefit for you there. If you need to bid on a contract for the government and you need to be in business for 2, 3, 4, 5 years, I don't know. If you want to buy an actual corporation that's been aged 2, 3, 4, 5 years, that might make sense. Now, first of all, I'm not an attorney and this isn't legal advice. So whether or not that's considered to be fraud or not, that's something you maybe want to talk to an attorney about before you actually do it. But I'm here to talk to you about the other purpose, right? The other purpose is that you're actually going to possibly get a shelf corporation to convince lenders and credit issuers that you've been open longer than you have. In my world, that is one of the biggest things that you actually need to know. That's one of the biggest things that people talk about and want to use these for. So here's my thoughts and here's what you need to know. And then we're going to go look and see what the authorities say on this. First of all, let me explain how the process works. When there's a change of ownership in your business, meaning that when your records show that a new owner took control over that business, it throws up all kinds of red flags in my world. Remember, my world is the capital world. My world is the world where you get credit and you get financing for your business. So what happens is when you have an ownership change, let's say you buy a shelf corporation. It wasn't your business. You bought the business from somebody else, right? You bought it, it was set on the shelf. Now you're going to try to convince lenders and credit issuers you've been open for years to try to get more credit and financing. Here's what you don't know. is that what happens is the minute that ownership change takes place, all kinds of alarm bells start going off. As a matter of fact, your business credit reports even throw up red flags and indicate that there has been an ownership change. Now, when lenders and credit issuers see this, then what happens is they ultimately, in many cases, no longer go by the corporation start date. They start looking at the bank account start date instead. Here's why. Shelf corporations, as I mentioned, they're really just sold with all the basic papers for it being an entity. They don't set up bank accounts when they set up initial shelf corporations. So lenders and credit issuers are very smart, right? Trying to fake out Bank of America is pretty tough considering as much fraud as they deal with. They've sniffed that out a long time ago. So what they've realized is that when we see a change of ownership, what we need to do is look at when the bank account started. So let's say you opened up a corporation 5 years ago. It sat on the shelf. Somebody opened it, sat on the shelf. You bought that corporation. Well, now what happens is they see an ownership change. They see that you're the new owner. Then what happens is they actually will say, you know what, let's look at when the bank account was started. Well, you don't even start the bank account until you bought that shelf corporation, right? It didn't come with it. So now you just bought the shelf corporation in January 2020, and now you open your bank account January 2020, and guess what lenders and credit issuers count as the real date your business opened? January 2020. So what I'm trying to say is this: a lot of people try to use shelf corporations to fool lenders and credit issuers that they've been open longer than they have. But what they don't realize is the minute they take ownership of that and there's an ownership change from who you bought it from to yourself, lenders and credit issuers see on business credit reports and other places that that ownership change has taken place. Red flags go off, and then they want to see in a lot of cases your bank account start date, and they'll use that as the date of establishment, not the actual date the original corporation was actually started, because they suspect that you're using a shelf corporation. So they've already figured this out. And they're really doing this in a way where it's tough to do, because you really can't use a shelf corporation to prove or to try to fool lenders and to get loans and lines of credit that you've been open longer than you have, because they're going to be wise to that. They're going to realize that that actually is not the case, okay? So keep these things in mind. Now, what's the official word? Well, it's not viewed favorably by the regulators, lenders, business credit reporting agencies. A lot of them say they're unethical, borderline illegal, or fraud. As a matter of fact, if you do check out my YouTube channel and type in shelf corporations, you'll see I actually have slides, which I don't have enough room on my chalkboard to put all the quotes, but I have actual quotations from the business credit reporting agencies, the FTC, and other government agencies that do not like shelf corporations. The big banks, nobody likes these for obvious reasons. So here's the rundown. More than half of all loan applications are denied because of fraud. Most people don't know that. They think they don't have the revenue. They think that they don't have the credit to qualify. But most loan applications aren't denied because you don't qualify. Most of them are denied because they think your application is fraud. So because of so much fraud that happens in the banking and credit industry, because so much of it's there, they have all these red flags to look for shelf corporations, pick up that they're there, and a lot of times that people are trying to use shelf corporations to basically trick lenders and credit issuers that they've been open longer than they have. So as a result, the FTC, okay, when you talk about the actual business credit reporting agencies, Dun & Bradstreet, Equifax, Experian, even when you actually are looking at other organizations that have to do with crime, theft, other agencies within the government, none of them are happy with shelf corporations for this reason, because inherently they're typically associated with fraud. So you got to be very careful here. I have a rule, and here's my rule. If the big business credit reporting agencies, the lenders, the government doesn't want you to do something, don't do it. It's not good. First of all, let's be honest. If you're going to get a shelf corporation to try to fool a lender like Bank of America that you've been open longer than you have, it's Bank of America. Of course, they know what you're doing and they know how to figure it out. Okay, so do credit issuers. You're not winning by actually trying to convince them that you're doing something you're not. Secondly, if you're doing something against what the reporting agencies, against what the actual government, against what lenders and credit issuers want you to do, you're fighting a really big uphill battle. Now, let me tell you a real drawback of doing shelf corporations in my world, the commercial credit world. When the business credit reporting agencies see this and they know that you're setting up an entity and they see that you've bought a shelf corporation or it looks like you've bought one from another company, how do they know that? It's simple, right? If you buy 10 shelf corporations under your company's name or name, and then you're going to sell those at a later point in time, when you go to sell those, the ownership changes from your company or name to the person buying it. So the reporting agencies see that the history all links back to Joe Schmo, and they see it's sold to somebody new. Well, when they realize that Joe Schmo is selling shelf corporations, they red flag that company and individual. Then when that shows on a credit report that somebody just bought a company from Joe Schmo, they know it's fraudulent. They know that it's a shelf corporation. And in a lot of cases, they shut down the credit profile of that actual business. We see this happen all the time. People come to us, they buy a shelf corporation for $2,000, $3,000, $4,000, $5,000. Then all of a sudden they start building legitimate business credit on a bogus shelf corporation. And 6 months into the process, Dun & Bradstreet completely wipes out the credit profile. They go to access their credit report, Dun & Bradstreet says it doesn't exist. And then people come to us crying foul and say, what do we do? And you know what we say? You start over. You can't do anything. Because once they're red flagged, once a reporting agency like Dun & Bradstreet shuts down your credit profile, the game is over. You're never going to get access to that again that I've ever seen. So remember, consumer and commercial credit, very different worlds. Nobody's going to come in because you did something wrong and just shut down your consumer credit report. But in the commercial world, they'll do this all day long. There's no regulation that says they can't. So you need to know that. First of all, when you buy a shelf corporation, they see the ownership change, the reporting agencies pick it up, they actually report it and throw up red flags. It's a big alert to people that something is going on. Okay. The second thing is if they see that the ownership changed from an individual or company that's notorious for selling shelf corporations, they'll put not only a red flag, but they'll ultimately shut down the business credit profile completely. You don't have access anymore. It doesn't exist. The only thing you can do is start over, which means you have to basically start a new corporation. You spent all that money for that shelf corporation and accomplished nothing. So some things to keep in mind if you're even thinking about doing this, okay? So again, here's what the experts say. The credit reporting agency, if the business is under new management, it's going to list that on your reports, as I mentioned, okay? So it effectively re-ages the business. So what happens is you bought something that's 5 years old thinking it shows lenders and credit issuers you've been open for 5 years. The minute the management changes, the reporting agencies then updo it, and it effectively re-ages the business to today's date. So all the benefits you're trying to get, you actually lose. When it comes to lenders, many say that the account start date is now the bank account start date when they realize that an ownership change has occurred, okay? That's what happens. The ownership change throws up red flags. That's how lenders are actually dealing with it. So other things to keep in mind, the cost is expensive. These things can sometimes cost $6,000, even $20,000. And other problems that you need to keep in mind with these is you now become the owner. You're responsible for everything that happens in that corporation. You're responsible for back taxes. You're responsible for lawsuits. You're responsible for judgments. You're responsible for liens. So in a lot of cases, just is not worth it. You have to think about it. It's not needed. You're not fooling lenders and credit issuers. They're going to re-age the corporation. You're not going to get credit for the longevity that you think the business have. Most vendors approve new business for credit anyways. You don't need to buy an aged corporation. You're not going to fool lenders. And when it comes to building business credit, if you use vendor credit, you can succeed anyways without buying a shelf corporation. Okay, so the key is to really know the vendors, which we talk about in a lot of our trainings, so you don't actually need a shelf corporation to begin with. So, in summary, let's talk about it. They're legal. Anybody can set up an entity. Anybody can sell an entity. So you can come in and get a shelf corporation. You could buy a shelf corporation. There's nothing illegal about that whatsoever. The question becomes, what are you going to use it for? If you're going to use it to try to fool lenders and credit issuers to thinking you've been open longer than you have, well, first of all, there's an argument on whether that's even fraud or not. I'm not an attorney and this isn't legal advice, so I won't get into that part of it. But think about it. If you're buying a shelf corporation to fool a lender to think that you've been open longer than you have, there's a real good question whether that's fraud or not, something to keep in mind. But what I will tell you is this: lenders, credit reporting agencies, and the government, none of them have anything good to say about shelf corporations. That's a huge red flag when that happens. When they see that ownership changed, they're automatically going to red flag your credit profile, and lenders and credit insurers in a lot of cases are by default going to start looking at your bank account open date or re-aging the corporation, meaning that a lot of them will then count the new ownership change date as the date the company was founded, bypassing the entire inherent benefit of getting a shelf corporation to begin with. So, in my opinion, Don't get a shelf corporation. You don't need a shelf corporation. There's no reason to get a shelf corporation. First of all, lenders are very tough to try to con. They're very tough to try to fool, because what's going to end up happening is a lot of lenders are going to actually come in and they're going to recognize that ownership has changed. They're going to use the new date. It's not going to count. When it comes to credit issuers, the same thing. You're not going to pull one over on them. So do the smart thing. If you're really doing this to make yourself look more credible to lenders and credit issuers, here's a tip. Build business credit. A lot of small businesses don't even know the steps to do that. If you watch my live streams, you know how to. You can go to YouTube. You can go to our Facebook page. You can just go to creditsuite.com, top right of our page, access our podcast and our YouTubes and our Facebook and our Instagram and everything that will teach you how to do this. Okay, so you don't actually need to come in and buy an expensive shelf corporation. You can do this on your own. You follow the steps we outlined. You get vendor credit. You start to get retail credit. You start to get fleet credit and Visa cards and MasterCards. You don't need an aged corporation to be able to do this. So hopefully I just saved you a lot of headaches and a lot of money. And also keep in mind, one of the biggest negatives of shelf corporation, the minute you buy that entity, you are personally liable for everything that took place in it before you bought it. So liens, judgments, lawsuits all become your responsibility. So a lot of reasons to avoid shelf corporations. I don't see a lot of benefit for you to get them, especially since you could build business credit the right way, look legitimate to credit issuers and lenders, and use your established business credit to qualify for what you're trying to without needing to rely on the age of the business to be able to do so. You want more information? Check us out online, creditsuite.com. As a matter of fact, if you go to creditsuite.com/EIN, I might even have a little cool thing that pops up here. I don't know if I can pull this up on my thing or not. But if you go to creditsuite.com/EIN, there's even a great free guide that you can get that maps out how to build business credit. That's creditsuite.com/EIN. And there's a great free guide that will teach you exactly what you need to know